Welcome to The Explainer. Today, we're digging into a viral video that's making a pretty huge claim that a historic, once-in-a-lifetime crisis is unfolding in the silver market.
Okay, let's just dive right in with this quote. We are currently living through the greatest disconnect between physical reality and financial fantasy in human history. Wow, that is a bold way to start, right? And it perfectly frames the video's core idea, that the silver price you see on your screen is pretty much an illusion, and the physical reality is something else entirely.
So the whole argument really starts by splitting the world of silver in two. On one hand, you've got the silver that we all see in the financial markets. You know, the one that seems stable, even kind of boring. But on the other hand, there's this hidden physical market that the source claims is in a full-blown crisis.
And you can see that split right here. The source calls it the paper fantasy versus the physical reality. The argument is that this paper world, the stable price, all the ETF shares, is basically a, and I'm quoting here, digital hallucination designed to hide what's really happening on the ground with the actual metal.
Okay, so how is this supply squeeze actually working? Well, the entire case rests on two massive forces that it says are colliding head-on, a supply that's collapsing and a demand that is absolutely exploding. First up, let's talk about supply. The video makes a very simple point. You can't just print more silver. You have to physically dig it out of the ground. And apparently, the geology of our planet is becoming a huge, huge problem.
And this chart just perfectly illustrates the point. The source talks about something called ore grade degradation. It sounds complicated, but it just means the rock they're mining is getting way less rich in silver. Miners today literally have to move 3 times more earth just to get the same amount of silver they did back in 2005.
And it doesn't stop there. The source highlights all these other huge structural issues. And think about this for a second. Because it takes more than a decade to bring a new mine online, the video argues that even if the price of silver went to the moon today, we couldn't see any major new supply hit the market until the 2040s.
Now let's flip over to the other side of that equation, demand. The source claims this is where the green revolution in all of our modern technology really enter the story. You see, silver has the best electrical conductivity of any metal on Earth. That makes it absolutely indispensable for solar panels, EVs, and military tech. The video calls this inelastic demand, which basically means these massive industries have to buy it at almost any price. There's just no substitute.
So here's the crucial number, 4. According to data from the Silver Institute cited in the source, the market has been in a physical deficit for 4 straight years. That means we're using way more than we're mining, and we're draining the world's above-ground stockpiles just to fill that gap. And hey, if you're finding this explainer helpful, please take a second to like, share, and subscribe so you won't miss what we break down next.
And this brings us to the central mystery, right? If the physical market is so tight, why is the price still so low? Well, the source has a pretty dramatic answer for that. It calls it a crime scene.
The mechanism for this alleged crime is a concept called rehypothecation. Now, this is a really key part of the argument. The way the video explains it, it's basically selling hundreds of paper claims on the very same single ounce of physical silver. This just floods the market with what it calls ghost silver, creating a massive artificial supply that does one thing: it smothers the real price.
The video even cites some analysts who claim the ratio of these paper claims to actual physical silver could be as high as 500 to 1. Just let that sink in. That would mean 500 people all think they own the exact same ounce of metal.
And this, according to the source, is the result. It points to an 80% collapse in the amount of silver that's actually available for delivery to people holding contracts. The argument is that the whole system is now running on, and I love this phrase, the fumes of the fumes. The source argues that this is the final warning sign before the endgame.
So what happens next? The source uses this analogy of a massive coiled spring. The idea is that the paper market has been artificially suppressing the price for decades, just building up more and more tension, more and more energy that it claims is about to be released.
The video lays out this 4-stage pattern of collapse, which you can see right here. It claims we've already passed through stage 1, money printing, and stage 2, asset inflation. The argument now is that we are deep in stage 3, the physical inventory is literally vanishing, which puts us right on the doorstep of the final explosive price reset in stage 4.
To illustrate what this reset could look like, the source points to rhodium. Now, unlike silver, rhodium has no paper futures market to hold its price down. So when a physical deficit hit,
its price went absolutely ballistic. We're talking nearly 4,000%. The video's core argument is that silver's situation is similar, but with that added explosive potential of that coiled spring we just talked about.
The source claims the endgame is a force majeure on the COMEX exchange. That's really just a fancy way of saying they run out of physical metal to deliver. At that point, the paper game is over, and the physical market violently takes over, setting the price.
So, given this pretty dire prediction, what does the video propose as a solution? Well, it frames it as a simple but urgent move from the digital world of promises back to the physical world of atoms.
The source advocates this very direct action plan, and it emphasizes that the goal isn't to get more dollars. The goal is to preserve your wealth through what it sees as a coming crisis by eventually trading the metal itself for other hard assets. This analogy just perfectly captures the video's core message. Silver is presented not as a way to get rich in the current system, but as a way to survive its potential collapse.
And that's our breakdown of the silver squeeze thesis. The source presents a really compelling, if not alarming case that's built on geology, industrial demand, and market structure. And it leaves the viewer with that final provocative thought.